Welcome back to the Daily Crypto Roundup. It's Wednesday, November 5th, 2025. And after yesterday's flash of volatility, the crypto market is catching its breath. Prices are showing early signs of recovery, with Bitcoin reclaiming the 100,000 zone and Ethereum edging higher. It's not an explosive rally, but it's a stabilizing session, the kind that reminds you sentiment can turn quickly in this space. Across the majors, we're seeing modest green candles and tighter ranges, suggesting traders are finding footing after what looked like the start of a deeper pullback. Today, we're going to unpack what's driving this shift in tone. First, we'll look at how Bitcoin bounced from its brief dip below $100,000 and what that move tells us about the underlying structure of the trend. Then, we'll examine how altcoins are reacting, some recovering faster than others, before turning to a series of key analyst calls that define the critical support zone to watch around 95,000. From there, we'll move into the ETF flow story, where some capital quietly rotated out of the top products, but others saw fresh inflows. And finally, we'll wrap with the most important headline of the day: Ripple raising $500 million at a $40 billion valuation, led by major institutional players. That story hits right at the heart of long-term conviction. A reminder that even when markets wobble, the big money keeps building. Let's start the way we always do, with the numbers. Bitcoin is trading around $103,809 after dipping as low as $99,000 overnight. That bounce back above six figures has eased some of the tension that built up early in the week. On the 4-hour chart, you can see strength returning, buyers defending key levels and short-term indicators flattening out. It's not euphoric, but it's resilient. And resilience after a shakeout usually tells you where real demand sits. Ethereum is hovering near 3,427, adding about 1% in the past 24 hours. It's regained some relative strength, holding its uptrend channel even as broader liquidity conditions remain mixed. Gas fees are steady, Layer 2 activity is solid, and open interest has picked up again. Subtle signs that traders are re-engaging rather than retreating. BNB at around $960 continues to grind sideways, consolidating after a strong run last week. It remains one of the least volatile majors right now, a rare anchor in a market that's been full of swings. Solana trades near 162, up slightly on the session, holding its broad ascending range. It's still one of the year's standout performers, and after an intense month of profit-taking, it's finally showing signs of stabilization. Funding rates have normalized, leverage is reset, exactly the kind of reset that clears the runway for the next leg up. XRP at $2.27 is flat but steady, with strong liquidity around the 230 level keeping volatility in check. Dogecoin sits at 16.7 cents, showing the usual mix of speculation and resilience, a coin that drifts when the majors drift but jumps quickly when sentiment turns. Cardano, around 54 cents, and Tron, near 28.8 cents, both reflect that same sideways strength, consolidating gains rather than breaking down. Avalanche, trading close to $16.90, and Chainlink at $15.20 round out the top 10, both showing light accumulation after earlier profit-taking. Across the board, it's a mixed but constructive day. The sharp sell-off that briefly rattled confidence yesterday has softened into measured rotation. That doesn't mean the bulls are back in full control, but it does mean the market found its footing faster than many expected. Now, what's actually driving this bounce? The recovery began overnight as macro sentiment steadied. Dollar strength cooled off slightly, giving risk assets some breathing room. That alone was enough to trigger short covering in Bitcoin after the sub-100,000 test. The move wasn't fueled by FOMO, it was driven by structure. Liquidity below round numbers got swept, then buyers stepped in. According to flow data, Bitcoin ETFs still saw notable outflows, roughly 577 million leaving in the past day, while Ethereum ETFs recorded 219 million in redemptions. But those redemptions were smaller than Monday's spike, meaning institutional selling pressure is already easing. Meanwhile, Solana ETFs logged nearly 15 million in inflows, quietly positioning as the week's relative outperformer. Kitco described the price action as bears in technical control. And technically that's not wrong, but it's less about control and more about transition. Momentum is slowing, but structure hasn't broken. Bitcoin remains above its multi-week range support between 95 and 100,000, and traders like Glassnode's Checkmate are still calling that 95 level the must-hold. Right now, it's holding just fine. Underneath the surface, long-term holders have continued to move coins, but that's not necessarily bearish. 10x Research estimates roughly 400,000 BTC, or about $45 billion, shifted from long-term storage into active supply in recent weeks. Historically, similar patterns appeared at the midpoints of prior bull runs. Distribution for reallocation, not panic exits. The point is that conviction holders aren't capitulating. They're managing exposure while staying long-term bullish. That's why, despite all the talk of whales selling, the market feels steady. Every dip below key levels this week has been met with strong on-chain accumulation, smaller wallets absorbing supply at lower prices. It's a changing of hands, not a collapse in belief. We'll take a short pause here. And when we come back, we'll dig into how the ETF flow story fits into this broader shift in sentiment, and why one headline investment round might be the single most bullish signal we've seen all month.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
All right, taking a breath for a second. Now let's look at how that quiet rotation through ETFs fits into the bigger picture. Today's ETF data is painting a more balanced scene than the headlines suggest. Outflows from Bitcoin and Ethereum products were offset by steady inflows into mid-tier alternatives like Solana and Avalanche. That means this isn't capital leaving the space, it's capital rotating within it. Investors are trimming top-heavy positions, locking in gains, and then redeploying into assets with better near-term risk-reward. It's the same behavior we see in equities when large-cap tech cools and mid-caps catch a bid. The bigger takeaway is that ETFs are now moving in sync with global macro sentiment. Crypto isn't operating in isolation anymore. It reacts alongside stocks, yields, and currencies. That's not a weakness. It's a sign of maturity. It means the asset class has gone mainstream enough to move with the tides of global money, not against them. And right in the middle of this cautious but functioning market, Ripple dropped one of the most powerful headlines of the quarter. A $500 million funding round at a $40 billion valuation, led by Fortress Investment Group and Citadel Securities. That's not a speculative bet. That's deep-pocket capital reinforcing a key infrastructure player. The money is going into scaling Ripple's cross-border payment systems, expanding its tokenization platform, and cementing its role in regulated digital finance. Reuters confirmed the deal closed this week, with both U.S. and international institutions participating. A strong endorsement of crypto's evolution into enterprise-grade finance. It's also the clearest contrast you could draw. While traders worry about day-to-day candles, legacy institutions are writing nine-figure checks into companies building the rails for the next decade. That's conviction. That's the quiet part of the market most people miss. Several market analysts have been quick to weigh in on what Ripple's funding round means beyond just the headline number. Chris Weston, head of research at Pepperstone, called it a defining moment in the tokenization timeline, adding that, "This isn't a speculative VC point dash, it's capital deployment into the financial plumbing that will underpin regulated crypto payments in the next 5 years." Similarly, Bloomberg Intelligence's Jamie Coots framed it as a vote of confidence for utility-driven crypto. The Ripple raise highlights a structural shift. Value is consolidating around networks that solve real payment and liquidity problems. It's the difference between hype and infrastructure. That theme, real-world utility overtaking speculative narrative, keeps surfacing across institutional desks. Analysts at Galaxy Digital Research noted that the biggest investors in this round weren't native crypto funds but global financial institutions looking for scalable, compliant systems. What this tells us, they said, is that blockchain adoption is now being led by the same firms that manage the traditional rails, not by those trying to replace them. The funding also coincides with a surge in central bank and corporate interest in blockchain-based settlement. Ripple's technology is already used by more than 70 financial institutions worldwide, but this capital raise gives it the resources to expand into tokenized asset custody, FX settlement, and even sovereign-level payment corridors in Asia and the Middle East. Independent strategist Noel Atchison pointed out that it's also a subtle regulatory signal. You don't get Fortress or Citadel cutting half-billion checks into this space unless compliance conversations have already been cleared at very high levels. It suggests regulatory comfort is improving faster than most people realize. Put simply, this isn't just a show of faith in Ripple. It's an endorsement of crypto's institutional phase. The same week retail traders were trimming exposure, traditional finance quietly placed a massive bet on blockchain's long-term role in cross-border settlement. And if history repeats, that kind of conviction capital often marks the foundation of the next wave higher. And if you look at the timing, it couldn't be better. Markets are wobbly, retail sentiment is muted, and yet serious capital is doubling down on crypto infrastructure. This is exactly what happened in every major cycle before. The strongest hands build in the flat parts of the chart. When you zoom out, today's combination of short-term caution and long-term confidence feels like the healthiest kind of balance. Bitcoin's holding key support. Altcoins are rotating, not collapsing. ETFs are seeing tactical rebalancing, not flight. And institutional investment is quietly expanding. It's easy to mistake quiet days for meaningless ones, but these are the sessions that set up the next trend. Stability is never as loud as volatility, but it's always the foundation it's built on. That's today's Daily Crypto Roundup. If you're listening on Spotify or Apple, make sure you're following the show and drop us a 5-star rating. It really helps the algorithm push crypto content higher. Drop your thoughts in the comments, stay safe out there, and as always, we'll see you at the top.